Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And today we're talking about our near and dear favorite stock, Alibaba. The current chairman did a big interview with CNBC Asia. We're going to talk about some of his points, whether or not the bottom might be in on Alibaba stock. Get to it.
Bottom Daddy.
Two Super Guys Trade Stocks.
So we did a separate video talking about the new Chinese stock market rules on limiting selling, net selling in the first half an hour of like the morning and then last half an hour of the day, and it's kind of stabilized Alibaba's shares a little bit. So that's an interesting thing that kind of coincide with the timing here. Okay, so the gentleman that did this interview is Joe Tsai. He was actually the most recent conference call. I've listened to Alibaba conference calls for a couple of years now. This is the first time I really heard him speak significantly, and I was kind of impressed about the way he viewed Alibaba a little bit. He's one of the founders. Have you heard this name before, or any familiarity with him at all?
Briefly, not as much as Jack Ma.
Yeah. Jack Ma's the more famous one. Jack Ma is still, as far as individuals, like the number one shareholder. Joe Tsai is number two. All right,
Okay.
so not far off. Brief history on him: he's born in Taiwan back in 1964. Second generation lawyer. Actually got his BA in economics from Yale, and then he did a Juris Doctorate. So he's a lawyer trained by Yale. So he's largely educated in the United States. What's up?
He's born in Taiwan?
Yeah,
Uh,
yeah. Which
okay.
definitely interesting. But he's also they consider him Taiwanese Canadian. He's kind of been a little bit of a global resider, I guess you could say.
All right.
Yeah, resident of
Interesting.
the earth. But he was a co-founder. He was very early days, one of the first 18 employees there at Alibaba, and occupied roles such as COO and CFO prior to his current chairman position. He's also apparently the one that's responsible for Alibaba's legal structure entirely. That's what they say, the VIE structure, where he was involved in kind of what's the word I want to say, not hedge fund, but a private equity before he coming to Alibaba. So he was really responsible for setting up the structure of Alibaba Corporation.
Okay.
And he's a lawyer.
Dope.
Right? So the second largest shareholder. Actually, I did not know this. He's the owner of the Brooklyn Nets. Did you know that?
I did not know that. No.
Yeah.
What the hell?
Yeah. He also owns several other teams. He was a big lacrosse player, so he owns a couple of professional lacrosse teams. They own the New York Liberty, the women's WNBA team from New York, and he owns the Madison Square Garden company as well. So, yeah, it's interesting. He's got a lot of American ties. Like I said, including college and actually high school. He went to high school in I think it was New Jersey. And his net worth is estimated at $8.6 billion according to Forbes for 2024.
I can look this
That's
up.
going to be
He doesn't own the Brooklyn Nets outright, right? Like that's not.
yeah.
He's
Look it up.
got
Him and
to
his
own
wife
like a
own it.
portion of them.
No, he bought 49% from a Russian in 2019, and then had to buy the entire thing by 2021. Otherwise, he lost that option. And I think he's been,
Yeah. I didn't know that.
I did read about this. So this is some of his comments from this interview. Now he's basically said that they were a substantial portion of that worth is in this business. So him and Jack Ma are both committed to seeing Alibaba successful. That was one of his points there. That he is a large part of his net worth is tied to this. Therefore, he's invested in it doing well long term. Now, this is something interesting. Talking about breathing new life into the business by making leadership changes and reorganization. Alibaba has been in a continual phase of reorganization. It seems like since we've been shareholders for the last couple of years. Right?
Yeah, we've gotten to experience all the fun stuff.
Yeah, I think we may be moving past that phase. It sounds like they're starting to stabilize and actually have a long-term plan that they're moving towards. This is another interesting point that came up in the most recent conference call, and then he reiterated in the CNBC interview here, talking about kind of divestiture of non-core assets. So I think they did $1 billion in the last quarter. He said that they've done $1.7 billion quarter to date. They're selling off entities that Alibaba has owned or had in kind of a partnership or stake in that are not in their strategic long-term vision of e-commerce and cloud.
Okay,
That's really
good.
where they're moving towards.
Yeah, good. You're making it less cluttered so you can make faster movements. Because otherwise, they're slow as hell. You have too big of a company, a lateral movement takes a month.
Yeah, I completely
Terrible.
agree. I like this vision. This is what you're seeing from a lot of major tech companies right now is this streamlining and efficiency. Meta was really at the forefront of this, and we saw what happened with them. Alibaba is kind of following in footstep to what we've seen from these other large mega cap like tech stocks. Now, as far as the spinoffs, that was a discussion to try to unlock shareholder value, but he's like, it doesn't make sense to do it in a poor market, which I completely agree. Right? You're not going to get a good valuation. Why would we do that? Why would I sell something, for $10 today that I can keep as an entity on my own business and then hopefully someday it'll be worth $25? It doesn't make sense to sell it today. That's what
Right.
they're doing.
That makes sense.
That's what the cloud and
How often did he say the word artificial intelligence during that interview? Because he should have said it like 15 times. Just throw the word in, even if it doesn't make sense. What'd you have for lunch? Well, this artificial intelligence lunch spot.
Nope. I don't think he mentioned it once.
Damn it.
Another segment he kind of talked about here is U.S.-China relations. All right, talking about how Alibaba carefully monitors it, of course, and that the relationship, it will be challenged for a period of time. But both countries kind of realize that they need each other and that they're living in this new normal phase or of distrust a little bit and unease in that environment, and that's just going to be the way they're going to have to operate. That there's not going to change. All right, okay. So.
Great.
Yeah, that's not great, but that's I guess he's understands it, and that they're going to continue to try to navigate it to the best of their ability. But will we ever see a tailwind of peaceful reunification here? Probably not. It's not going to happen.
All right. Temu sucks.
So,
have you ever bought something from Temu?
I have not. All of these companies, that the Chinese e-commerce companies, all share a problem that I don't love from an American perspective is when you go on their websites. He mentioned AliExpress, which is their avenue or arm in the United States, is that they're gamified, right? Like the website navigation is horrible. It's just like being distracted by flashing prices and discount numbers, and it's not the kind of shopping experience I enjoy. I mean, I get that shopping is different in China, but to translate that to the American market, I think is unlikely to be successful.
There's also a lot of bullshit bribes. I know that this is not what this video is about, but if anyone's ever tried to buy something from any of those sites, when me and a buddy bought a large quantity of a product to sell it here, and they hit us with bribes. After the order went through and we waited like a month, they're like, need $50 or I can't do this anymore. It's like, okay, dope.
Yeah.
Cool.
Yeah, not great. He did kind of shy away from it and just said, the United States is just one part of the world. And it's definitely an interesting point to make. Whether or not it's worth competing for the American market, I don't know from their perspective if it's worthwhile. I think I'd rather see them to focus on having a larger portion of the Chinese domestic market and expanding into e-commerce in areas that are as of yet kind of unfulfilled with the trend dial and Southeast Asia kind of arms. They have been at the forefront of that, of going after markets that weren't as over penetrated as the United States. Here you're going to have to compete on like a margin basis, and I think that's difficult to do. You look at something like Temu, which is an absolute like monster deal where I forget the exact details of it, but they're basically getting subsidized shipping. So there's no way that Alibaba could compete with that, actually be profitable. They'd be losing money on each order, so it doesn't make sense for them to even engage in that market, which I actually get and support.
Yeah, and everything that you get from Temu breaks and has like lead in it. I don't know if you saw that stuff.
I've heard that before. As far as kind of the vision for Alibaba, focusing on performance, obviously, we've heard a lot about the challenging macroeconomic environment in China right now with the property crisis and rising youth unemployment and kind of question of whether or not we're going to have banking issues in China and slowing GDP growth. There's a lot of like real headwinds there, and obviously their business has been blunted as a result of that. In order to achieve success, Joe Tsai is basically saying that they have to deliver better experiences for their customers, and that's what they're going to be focused on, in investing in efficiency and their own platforms to deliver better customer experiences. All right. He said they're also looking at a good tailwind here of e-commerce growth. In the next 5 years, they're expecting the share of e-commerce of retail in China to go from 30% to 40%. Now, take that with a grain of salt. Remember, these are the guys that expected a 37% CAGR in Alibaba Cloud. Okay.
Yeah. Let's. Do you talk about cloud here? Because did you mention? Okay.
Yeah. There you go.
There we go. Perfect.
All right. So
yeah, that's bullshit.
Okay. It's interesting. Now they have been woefully underperforming in terms of the growth the last several years, right?
Horribly.
Like I said, they were looking
So
at an
bad.
entire cloud segment growth of 37%. In China is what their argument was, their projection based upon a few years ago. And yeah, we got the tailwind because of the U.S. regulations, or tailwind, headwind, where TikTok was kind of forced to onshore a lot of their kind of server usage and move away from Alibaba Cloud. For data security purposes is the argument, at least from the American standpoint. Now, I get that that was an issue, but they still should have been delivering better performance than the 1-2% revenue growth they've been managing. 1 to 2% revenue growth for a kind of leading technological area of like innovation. I mean, right? They have AI powered capacity on their servers is abysmal.
It's
You're looking at
horrible.
20-30% from the major American competitors like Google and
The
Microsoft.
the amount of like cloud growth from American companies compared with Baba, because obviously we were ahead. So when we've had Baba for like 3 years, we're like, all right, this is gonna be huge. Nothing, literally nothing, no
Yep.
growth.
Exactly. You know, I think from a demand standpoint, this is his argument saying that, China's only 17% of the GDP, but they are about 30% of digital data out there that needs to be stored. So he does still think that there could be, kind of a secular tailwind coming for Alibaba Cloud. Now, would I bet on that? No, I'm not going to willing to put any of this more kind of investment based upon something like that. But it's something that it could turn out to be quite a positive for the company, but it's kind of a buying a lottery ticket sort of standpoint, I think, at this point in time. If you get
Agreed.
what I'm saying.
100% agree.
All right, these are my kind of final thoughts here from hearing this review. Really happy that he's back involved in such a heavy, like, handed capacity. And I hope that they're going to have this kind of new mentality that they're going to stop having these continual evolution of the plan and then management change, plan and management change, that they're going to stick with the current management team, and that they're going to continue to have this evolution of improving cloud and improving e-commerce and divesting all non-core assets, which is, they've made some steps along that way. And, as far as not competing in the U.S. market, kind of mixed about that, but I think from a margin standpoint, it may actually be a wise decision just because of the cost and shipping infrastructure required to deliver to the American market in a timely fashion, which is American consumers largely grown to expect thanks to Jeff Bezos. It's going to be extremely expensive for them to be able to compete. It's probably not worth it for them to even begin to make inroads there.
Yeah, it's hit or miss though, right? Because we have the largest economy in the world. I just looked it up. We have 40% gross domestic product more than China, which is number 2. So I mean, it's
Yeah,
huge. But
yeah,
I agree. I
yeah. The
have
U.S.
bought
is like
something from
24%.
Alibaba. It took 4 months. So yeah,
Perfect.
not worth it.
Yeah. The one thing I was kind of interesting. What are your thoughts here? I know you can make this out of everything, but does this
Yeah.
kind of vaguely remind you of like a reverse Head and Shoulders?
Here's a problem with these bullshit patterns is
Mm.
they're perfect when you try to make a point. And then actually there's a funny meme of this for some investors just following these patterns blindly. It's too difficult to even bring technical analysis into a stock like Alibaba that is so dependent on US government regulations. It's
Yeah.
pure news. It's like okay, AMD is a good example. They just added 10% of their market cap. Super happy about it. No reason that should have happened, but there was a technical breakout. There's no news,
Yeah.
no reason that should have happened at all. This is different. I wouldn't put anything on
Yeah.
Baba for that.
Nah, I hear you. I from the most recent quarterly number, I still had them in like a free cash flow yield around like 20%. And someone
Hmm.
actually pointed out too, if you actually include their investments, that the free cash flow yield actually gets up to like 40-50%
That's
numbers. It's just
crazy.
like you can't even value it from that standpoint anymore. Like technical analysis, breaks down a little bit, like we were just talking about there. And even kind of from a valuation standpoint, it's hard to value Alibaba because it really trades based upon news than it more than it does its own innate fundamentals.
Yeah.
Lots of issues here, but all they have to do is just like a couple little things right, and they can unlock a massive stock kind of rally. It's my
Yeah.
thought.
If they just get like 10% growth in cloud just one quarter, that's not even a lot from what they're at. That'd be great, but it's not. I
Yeah.
don't know. I don't know. I hope that this is turning around. I mean, I have too much money in it, so I really hope. So, all
Nice.
right, guys,
All
let
right.
us know what you think.
Catch you next one.